All right, good morning, traders. Today is May 13th, 2026. My name is Coach Carignan. I'm the lead instructor here at the BYOB Trading Room. Thank you for being here. Thank you, everybody out there, podcast land, digital land, cyberland. Thank you for following and liking and subscribing to my content. Appreciate that. Love that. Thank you for the kind words. Special shout out Bob Jordan, John Jordan, Kathy, Sarah Roasted, Rick Sadler, Ed Carter, everybody that shares the BYOB content, helping get the good word out there to the World Wide Web so we can educate the masses. All right, so let's take a look at the market. Before I take a look at the market, this is going to be my game plan this morning. All right, it's got a little bit of pre-market consolidation over prior consolidation. So we got pre-market on top of post-market. So that's a bullish environment. I'm looking for an uptrend over 740.50. I don't have too many upside targets. The first one's going to be, of course, the all-time high, then to the 741 call wall, and then on up to 745, probably even 750. All right. On the downside, if we break the pre-market lows, all right, that's 739.40. If we get below that, I'm looking for the gap fill at 738.15, and then on down to the 730 put wall. Now, all of this could change as soon as the market opens. The put wall could change the location all the way up to 735, maybe even 736. The call wall may flip out to 745. I don't know what's going to happen when the market opens up, but that's what I'm looking at in the pre-market in the morning time. So let's go ahead and get started with the summary from yesterday. See what happened yesterday. And here we go. All right, so my SPY pivot this morning, 735.65. Above it, I'm a bull. Below it, I'm a bear. SPY made lower low, lower high, closing over bullish trap over the rising 17. IWM, QQQ, FNGU made lower lows, lower highs, and closed inside bullish traps over their rising 17 EMAs. Diamond Dow made an outside day. It's a higher high and a lower low, closing over a bullish trap over the rising 17. SPY closed with 2-hour bullish consolidation and a 10-minute uptrend. Gold made a lower low and a lower high, closing over a bullish trap over the 17. Silver an outside day. Silver's making a little I don't know, starting like a little rally going on there in silver. It's looking good. Silver made an outside day, higher high, lower low, closing over a bullish trap over the flat 17 EMA. USO higher high, higher low, closing over a bullish cross over the 17 EMA. UNG still in a downtrend. UNG's in an uptrend now. Also made UNG made a lower high and a lower low, closed inside a bullish trap and over the falling 17. U.S. dollar index still in a daily downtrend, closed near the 98.31 area. SPY max paying for today 7.35 with a put to call ratio of about 1.5 puts for each call that expires today at 4:15. Those index options expire at 4:15. Security options expire right around 4. All right. So if this is your first time seeing this, these are all in daily uptrends over the 17 EMA. These are all in daily downtrends under the 17 EMA. If they have a star next to it, they're building out a launch pad or a bull flag from which to launch higher. If they got a dash, it means they've already started the breakout. Over here, all right, under the 17 EMA on the daily chart, over the 17 EMA on the daily chart over here. Okay, so dash over here means they already had the breakdown. They already started their breakdown. If you got a little star next to it, that means they're building out a platform, or it's a bear flag from which to dive lower. All right, so under the 17 EMA on the daily chart, over the 17 EMA on the daily charts. Take a look at the market this morning. Move this out of the way. Move this down. Okay, so in this morning, you can see the consolidation over the prior consolidation. Okay, so that's bullish. All right, that's like this candle. If you group all of these candles together, make one candle out of it. Group all these candles together, make one candle out of it. You've got this candle is making a higher low and a higher high. Okay, so that's a bullish scenario right there. All right, so if we break the lows, okay, of this consolidation, all right, I want take a downtrend down to the gap fill, which happens to be right here, right about 738.15, 738.20. All right, on the upside, if we break over the top of this consolidation, I'm looking for new highs. I'm looking for new all-time highs. I want to challenge the current all-time high, which is at 740.79, and then I'm looking for new highs probably on up to the call wall. That would be the high on the call wall was going to be 741.50 because it's 741 plus or minus 50 cents. So that could be anywhere from 740.50 on up to 741.50. All right, and wherever the call wall moves to, which I suspect it may move to 745 if we attack the all-time highs and create a new all-time high this morning. So we'll see what happens. Right now, we're just kind of sloshing around underneath the VWAP right now. Okay, so we could be breaking down. I don't know what we're going to do this morning. We'll find out soon. Okay, so there's SPY on the 10-minute chart. On the 10-minute chart coming into the close yesterday was a 10-minute uptrend. On the 2-hour chart coming into the close was just bullish consolidation. Not really an uptrend, not really a downtrend, just bullish consolidation. And you can see price moves from the left to the right. If I put the square on here, so you can see basically, price is just kind of moving from left to right here. It's not really making an uptrend or a downtrend. So I'll take this out of here. Okay, so I just call it bullish consolidation. Okay, on the 2-hour chart. Daily chart, again, we're still bullish. All right, and in an uptrend, you can see we're still at the top of quadrant 4. So that's bullish. And in an uptrend, we haven't made any lower lows. All right, so for that's bullish in an uptrend. Weekly's bullish, and in an uptrend. Monthly chart bullish, and in an uptrend. Okay, let's take a look at QQQ. All right, QQQ on the 10-minute chart. Again, same bullish consolidation over the top. I want to trade that breakout for a new all-time high underneath the base here. Okay, so underneath this candle, looking for a breakdown for the gap fill. And then the next target's going to be right here where the VWAP is. Okay, same with SPY and QQQ. Wherever the VWAP flatten makes a right angle right here. Okay, that's going to be the second target after the gap fill. All right, so if you got SPY or QQQ, you see where that makes a right angle right there. That's going to be my target is yesterday's VWAP on QQQ. All right, so QQQ, again, breakout over the top. I want to trade as a green erases red event. All right, the same thing on the bottom side. I want to trade a breakdown below this candle as a red erases green event, all the way down to our entry, all the way down to the gap fill, then to the VWAP, and then to the prior lows. Okay, so that's QQQ. Let's take a look at the 10-minute chart coming into the close yesterday. 10-minute uptrend, 2-hour chart. At a 2-hour uptrend coming into the close on the QQQ. Daily chart, you can see we're at the all-time highs up here. So that's top of quadrant 4. It's bullish and in an uptrend for QQQ. Same with the weekly chart. Same with the monthly chart. Both bullish and in an uptrend, QQQ and SPY. All right, let's take a look at IWM. Give me just a minute here. I'm going to take a pause just a second. Be right back. Okay, we're back here. All right, let's take a look at IWM on the daily chart. Daily chart for IWM. Let's pick up this one right here. Push this up. Get the daily chart. So, make sure I got the right one. Okay, so daily candle for IWM is a lower high and a lower low. We closed inside a bullish trap. We closed over the rising 17. All right, put the quad lines on that. And we could probably push the quad lines only over right up to there. Okay, you can see we're at the top of quadrant 4. So that's bullish and in an uptrend for IWM. Let's take a look at Diamond Dow. Okay, Diamond Dow, outside day, higher high, lower low, closing over a bullish trap, over the rising 17, over the all-time high anchored VWAP. We could move this out. Okay, so here's our rally. We're in the middle of quadrant 4, so that's bullish and in an uptrend for Diamond Dow. Let's take a look at FNGU. Okay, FNGU is lower high, lower low, closing over a bullish trap or in a bullish trap, over the rising 17, over the all-time high anchored VWAP. That's the pink line right there. And we can push this out. All right, so we got, actually, we could just push it out to right there. Okay, so top of quadrant 4 on this rally. So that's bullish and in an uptrend on the daily chart. Bullish and in an uptrend for FNGU. All right, and let's, actually, we could just, maybe we should probably incorporate that right there, okay? Bullish and in an uptrend. Let's take a look. This is the all-time low. This is the all-time high on FNGU. Let's take a look at silver and gold. Start with silver. Okay, see silver making a move here. See it's on top of the all-time high anchored VWAP. Okay, hasn't been up there for a while. All right, and it's trying to break into the upper third up here. Okay, not quite there yet. All right, but it's getting close, knocking on the door. So upper third would be bullish. So right now, it's not in the bullish section, so it's just neutral. And you can see a high here. They made a higher high and in an uptrend. Silver made an outside day. You can see higher high, lower low, closing over a bullish trap over the rising 17 EMA on silver. Let's take a look at gold. Okay, you see gold put a lower high, lower low, closing inside a bullish trap under the all-time high anchored VWAP. Up here in quadrant, bottom of quadrant 4. So that's going to be bullish. Hasn't made a higher high yet, so still in a downtrend. One of those dysfunctional downtrends because since making the lower lows, all right, it has not made, well, it's not been moving down. It's actually been moving either over to the right or melting to the upside. So there's gold, bullish, dysfunctional downtrend on gold. USO. USO is a higher low, higher high, closing over a bullish cross over the 17 EMA. Top of quadrant 4, that's going to be bullish. And in an uptrend, hasn't made any lower lows. You can see it up over this 4-year high anchored VWAP right there. So that's USO. USO just recently made new 13-year, new 11-year highs right here on this candle right up there near the top. Okay, so new 11-year highs for USO. Let's take a look at UNG. Okay, so UNG, it says written in there that it's in a downtrend. It's not. It's in an uptrend because you got a high here, and they made a higher high. All right, so UNG, yesterday's candle, lower high, lower low, closing inside of a bullish trap over the flat 17. You can see we're down here in quadrant 1, all right? So this is bearish because we're in the lower third. Upper third would be bullish, lower third would be bearish, in the middle is neutral. Okay, so remember silver was neutral because it wasn't in the upper third, wasn't in the lower third. Now you can see UNG is down in the lower third, so that's bearish, but currently in an uptrend, all right? Because they got a high here and they made a higher high. So that's UNG. Let's take a look at the internals for the market, T2101. Again, market's up near the all-time highs, and you can see the market breadth, market participation, Just hanging out here in the reversal, getting close to being in the reversal zone. Just right now, just kind of hugging these lows. So not good internals. You want the market to be making new highs with an increase in volume. That means that this high probably will come falling back down. All right, because number one, we didn't put any stairs or foundation or platforms along the way to catch price. We didn't. In other words, we didn't do any consolidation. All right, groups or days of consolidation. So because we didn't do that, we went straight up. This makes this rally that we're currently in the all-time highs very volatile, very vulnerable to volatility. All right, so you know, keep yourself. I have an idea of how you want to hedge yourself, and I don't know if we're nearing the top, but we are nearing the reversal zone right here for T2101, and that would be the market breadth or participation. Okay, so that would be the participation index, and you can see it's getting lower and lower and lower. So you want to make, like I said, new all-time highs on with a lot of participants. All right, not on thin volume, because it makes that's a very weak high when it does that. So that's T2101, T2122. We spent most of April up here over the gold line, and that would be the 50-yard line. All right, separating bulls and bears. So for the most part, all of April and parts of May, spent quite a bit of time up here in the bullish zone with bullish control. Not the same right now. Okay, it's getting towards the halfway mark for May, and you can see price is got a lower high, another lower high, another lower high, a lower high, a lower high, and then we finally break the support here, and we wind up camping out yesterday. Part of the day in the sell zone, the rest of the day inside the seller's chop zone. That's T2122. That's the internals on the 15-minute chart. And you can see, all in all, we spent the whole day with bearish control underneath the gold line right here. That would be the 50-yard line, separating bullish control from bearish control. So obviously bearish control down here yesterday. T2122, that's the 15-minute chart. T2123, you can see these are the all-time highs up here. This is the rising 200 SMA. We're under the rising 200 SMA. Not my favorite place to be. I like to be above it when I'm a bull, and I'm right now. Everything's bullish. Okay, nothing's falling apart yet. Okay, everything in the market's still bullish. So you can see a low here, and they made lower lows, so that's a downtrend, and they haven't made any higher highs. See this little peak up here? They have to take out those highs up there. We'll see if they can get it done. I don't think so. We'll find out. You can see they've got a bearish gap down. That gap was never filled today or yesterday. See that bearish gap down? So that's a sign of bearish control. They did have a nice rally back, but they really need to climb on top of the 200 and consolidate up there. Instead, they wind up closing below the 200 and not completing the gap fill. So obviously bearish control. So this is in a downtrend, okay? So when it comes to charts, you can see here's the rally low right here. So this is bullish, but currently still in a downtrend. You can see it made a lower high and a lower low right here on the 15-minute chart. 3-bar chart, still bullish and in an uptrend, all right? You can see there's our April origin of the first rally, up, pull back, make a higher low, rip, make a new all-time high, pull back, make a higher low, rip, make a new all-time high. So top of quadrant 4, that's going to be bullish. And I don't see any lower lows coming through here. So that is still in an uptrend on the 3-bar chart for T2123. FNGU yesterday, bearish gap down. Notice the bulls didn't fill the gap up here. Bearish gap down. and they managed to fill the gap right over here. So they came back there, filled the gap. We're up over the rising 200 SMA. Okay, that's where you want to be if you're a bull. That's where you want to be. And price kind of had a nice bounce there. You can see the green dots here, but we didn't make a higher high. So good news is we didn't make a lower low. See, we had to get below this low right here. So these are the red ones. And you can see on the green ones, we didn't get over that high. So we're still in that uptrend on the 15-minute chart. So this is still bullish and in an uptrend. Even though we had that harsh pullback, we still failed to make a lower low over here from the day before, a couple days before. So bullish and in an uptrend still on FNGU. All right, let's take a look at the economic package and see what they've got listed there. Then we'll take a look at the pre-market one more time to see how we're going to trade the pre-market in case anything changed before we get there. Okay, so max pain for today, 735 right there. Put to call ratio 1.5 puts for each call that expires today. Remember, those index options expire at 4:15. Security options expire at 4. Let's take a look at the earnings report. Today is Wednesday, so all eyes going to be on Cisco. That's the tip of the spear. They do hold together a lot of that infrastructure that goes with AI. So be all eyes on Cisco for their earnings sometime today. You can see that's 381 billion. Okay, that's going to be a big time market mover. I think all eyes are going to be on that. Not to say that BABA isn't big and isn't influential at some times, but because we're dealing with a tech rally right now, it's always been most of the rallies have been led by tech, and AI, that's the future. So it's going to be all eyes going to be on Cisco. Yeah, they will take a look at Alibaba, but it's not going to influence the market as much as Cisco will. So let's take a look at Thursday. Thursday, Applied Materials, more infrastructure right here. 325 billion for Applied Materials. So a lot of eyes going to be on that. Brookfield, everybody else, just familiar names, but not really capable of moving the markets. Applied really doesn't have enough to move the markets, but they will be looking at it as far as kind of like to take the temperature of the market. They'll want to see some good numbers coming out of Applied due to the AI demand. So they'll want to see some kind of good numbers coming out of Applied Materials. Again, a little bit part of the tip of the spear there on the leadership in this rally, which has been tech and AI. So that's Thursday. And that's at Thursday evening. Remember, Cisco is going to be tonight after the close. Applied Materials tomorrow after the close. On Friday, all familiar names, but nothing that's here that's capable of really moving the markets. Let's take a look at the economic package. And that is for today, MBA mortgage applications at 7. We got PPI final demand at 8:30. Petroleum report 10 o'clock. Tomorrow, jobless claims at 8:30. A lot of stuff coming out at 8:30 tomorrow. Retail sales 8:30. Import-export prices 8:30. Business inventories 10 o'clock. And then a natural gas inventory or status report at 10:30 tomorrow. All right. Should be petroleum report. Yeah. Petroleum inventories or levels. All right. Sometime today at 10:30. Then and the status report for petroleum. On Friday, what we got? Empire State Manufacturing Index at 8:30 in the morning. Industrial production 9:15, and then a rig count at 1 o'clock right there. All right, so let's go visit the pre-market and see what's going on, just in case there's people out there in Cyberland that are hoping to get a glimpse of how I'm feeling, what I'm looking at. So let's take SPY, because because that's when I trade the most. All right, so this is a 10-minute chart of SPY. I'm just going to say I'm going to follow the 10-minute chart, but there's certain things that are not far away, the first target, that I'm going to be on a 5-minute chart so I can catch the flips or the turns, all right, in the market. Once we get past the first level of targets, so the first level will be gap fill for the downside. Remember, a break below the pre-market lows for me was a breakout to the low to the downside. My first target was going to be gap fill because we gapped up in this morning. So that's going to be my first target. Second target's down here. Now, after I hit my first target, if that downtrend continues, I can then flip it to a 10. But the 10 can be so big and bulky sometimes, okay? You can see there's a $1.50 candle right there, okay? It can be so big and, well, now it's $2. See, it can be so big and bulky sometimes that if you're on it and you're waiting to see what color it's going to close, by the time the candle completes, the first target and a half is already is well past. The candle's well past the first target and on its way towards the second target. So for that reason, I was going to use the 5. You can see there's the first target already hit right there in the pre-market. So that's why I was going to use the 5. And in these instances where target 1 is just around the corner from where you're entering, you got to kind of use a little bit of common sense and, flip to the 3-minute or the 5-minute and look for that edge, so you have an idea. Okay, all right, we're heading in this direction. I can use that smaller time frame to get in because I know my target's right around the corner here. Okay, now if you're not comfortable with that, stay with the 10 or the 15, whichever one you prefer. All right, and just keep following your rules. I'm just sharing with you that's how I capture an edge early in the morning, is I flip to the smaller time frame because I know my target is right around the corner, and I'm suspecting, you can see this is now turning into almost a $3 candle. You can see right there, 739.49, all the way down to 737, almost a $2 candle. Okay, so, and it's just started, all right, because it's 8:31, so we still got 9 more minutes. No, 4 more minutes on this candle. All right, I mean, it could be all the way down here by the time it's 8:35. Okay, see how it's growing? All right, so it could be all the way down here by 8:35. And if you're on a 10-minute candle, where's the 10-minute candle going to end at? 7:33, 7:35. That's why I'm saying sometimes the first candle in the morning, there's times when you have, how do I say it, intuition, a little bit of a hunch. You can see the writing on the wall. You can see the lower highs and the lower highs and the lower highs, and they're all kind of like winding up price to punch down. All right, so that's a little bit of intuition there, because it's almost like, oh, I've seen this look before, and so you'll probably want to flip to a 3 or a 5 so you can just have that confirmation of that downtrend. Keep your stops the same. You still need to use stops. Just because you're changing time frames does not excuse you from using stops, okay? Risk management is always constant, all right? You're going to be responsible for risk management at all times, okay? So there's SPY on the 5-minute chart. You can see we're breaking down now. We've already hit gap fill. That's an igniting candle right there. So I'm going to be looking for some follow-through, all right, to that igniting candle. So we just hit some support, and that would be all of this consolidation right through here. So I'm going to just box this off, and I'm going to drag my box all the way. So they just hit some minor supports. And we'll see if they bounce off of this like a trampoline and go back up and test the resistance, the overhead resistance up here. Okay, that would be the top of all of this, and see if they test all of that. Okay, other than that, I'm looking for follow through. If not, I'm just looking for chop, all right, back and forth between the two targets, between VWAP and the gap fill, all right, VWAP and the gap fill. So that's SPY. So looking for follow through on this. If they get the follow through and they have a downtrend, I'll be interested in jumping in, all right, as a continuation of the 10-minute downtrend. You can see the 3 and the sticks are lining up underneath the 8. You can see everything's pointed down, so I'll be looking for follow through. I'll be looking to trade a continuation of that downtrend. On the flip side, if we wind up getting back up here over VWAP, right over that red candle, okay, I'll be interested in taking a 5-minute or a 10-minute uptrend over that red candle up there. That would be close to a green erases red event all the way up there, okay, on SPY. So over this 740.50 number, okay, I'm interested in taking that to the upside, up to the call wall, wherever that winds up being. We'll see. Okay, but that's SPY right here. Other than that, I'm interested in trading a continuation of the current 5-minute, 10-minute downtrend that's already started right through here. Now that may be an exhaustion candle. We got 1, 2, 3, biggest candle at the end of that 3-candle pattern. We'll see. So we're looking for follow through somewhere down here within the next hour before we open up. PPI got hot, or well, CPI was kind of hot yesterday. So I'm gonna say I'm not surprised. You know, when energy is causing all the havoc right now, and if they could broker some peace over there, which I really think it's going to be impossible to broker peace with these people. And God bless them, they got their own ideology. But if we could broker peace, we could have some stability in the oil prices and the energy markets. And once the stability reconvenes with the energy market, we could get some stability in pricing. Right now, everything's going to be volatile. All right, traders, that's it for me. All right, I will see you all in about 35 minutes, and I will open up the market with you while I render my video right here. Okay, so I'll see you guys in 35 minutes.